If you want to scale your trading to 7 figures in capital, in this video, I'm going to share with you the exact principles and mental models that my 7-figure traders have implemented in their journeys. These are the same principles that will take you from trading 4 figures to 5 figures to 6 figures and eventually to 7 figures. And the truth is, if you don't implement these principles, you're going to build any funding you get on a poor foundation, and you're going to be susceptible to losing it later down the track. The first mental model is that they're very good at chunking down big goals into small process-driven action steps. So they are able to chunk a big goal, for example, managing 7 figures of capital, down into the specific action steps that they need to follow. Trading or managing 7 figures of capital, just facing that goal can be incredibly overwhelming. But chunking it down into the specific action steps that help get you there is a lot more digestible and it's a lot easier to follow. So if you think about it, what is trading 7 figures in capital? It's $1 million of capital, which can be broken up into 5 $200,000 accounts. Now, what are the specific action steps that help you get one $200,000 account? Well, it's about ensuring that you have a trading edge, putting that edge into a mechanical trading plan so that you can consistently replicate that edge. It's about mastering your psychology so that you can consistently stick to your trading plan now. And it's about structuring your life in a way that allows you to consistently execute on your trading plan with a balanced state of mind, despite all the other things you have going on in your life. So that's how you get to one funded account. And then it's about paying for a funding challenge and then just consistently sticking to your trading plan. And then you can, with your trading plan, set up some sort of a drawdown protocol or a risk management protocol to ensure that you don't lose your funded account and go too deep into drawdown. But once you identify the specific process or the specific action steps that help you get one funded account, you just consistently replicate that. Once you get one, you maybe get a payout from that, you use that to pay for the next account. And then the next one, and then the next one. So what I've seen consistent with these 7-figure traders is that they're not focused on the end goal. They're not trying to, bite that whole chunk all at once. They've broken it down into the specific action steps, the process that helps them get one funded account, and then they replicate that over and over and over, and slowly but surely they scale up. So that's the first mental model each of these 7-figure traders have implemented. The second mental model is that they see both sides. And what I mean by this is that they're able to manage the paradox of being a trader. The great paradox of being a trader, especially a trader who is trading 7 figures of capital. Let's say, for example, you're managing $1 million worth of capital and you're risking 1% per trade. That is $10,000 of risk you're putting on each individual trade. Now, do you know if that individual trade is going to be a win or a loss on that individual trade? No, you have no idea on the individual trade whether that's going to be a win or a loss. There are too many factors that influence the financial markets at any point in time. So to know with certainty that that individual trade is going to be a win or loss is unrealistic. You can approximate an outcome over a large sample space, but that individual trade you can't predict. So the great paradox of being a trader, especially a 7-figure trader, is that you have to recognize and own and honor within yourself that you're going to be a great winner, because when you win, you're probably going to win, if you have a risk to reward of 3 to 1, you're probably going to win somewhere around $30,000 per position. So you're going to be a great winner, but you're going to be a great loser. And at times, you're going to be taking significant losses, or what a lot of people would perceive as quite a significant loss. So as a trader, you have to see both sides, you have to recognize both sides, you have to honor and appreciate both sides, and recognize as a trader, you're going to be both a winner and a loser. You're going to be supported through wins, you're going to be challenged through losses. And as a trader, you have to break out of this one-sided thinking that it's going to be all positive and all support and all happy and all nice and all pleasurable, because that doesn't exist. And as a trader, when you're trading a probability sequence, you have to recognize that both winning and losing are essential. And you have to know that you're going to experience both, and you have to be willing to be taking on $10,000 losses at any point in time. And, I know through my journey, I know through many of my students' journey, even you can probably look in your journey as well and see that sometimes you take losses quite quickly. And I know I've taken a few losses quite quickly, maybe 30 seconds of being in a position of taking a loss. So can you handle taking a $10,000 loss in 30 seconds? Because that is potentially the reality of being a 7-figure trader. And if you can't handle that, well, you're not ready to be a 7-figure trader then. So as a trader, you have to be willing to manage that paradox of both winning and losing. You're going to both win and lose. Okay? And when you finally learn that and you realize that winning and losing is too focused on the outcome, this is outcome-based thinking. You can transcend outcome-based thinking to process-based thinking, where you're not expecting or addicted to a win that trade, that therefore you're not pained when you take a loss that trade. You're not even thinking about the outcome. What you're focused on is, what does my trading plan say on this trade? What is the market communicating to me? What does my trading plan say? If the market aligns with my trading plan, I execute. If it doesn't, I don't. And you know that if you stick to your trading plan over a large sample space, you're going to be profitable. And when you transcend outcome-based thinking and focusing too much on the individual outcome to process-based thinking, that's when you truly understand and manage the paradox as a trader. When you're in process-based thinking, there is no paradox. You've transcended the paradox. And on top of that, you also increase your resilience as a trader, because now you're not seeking after an unrealistic outcome, winning all the time, and you've embraced both the outcomes in the pursuit of your process, and now you've significantly increased your resilience as well. Because irrespective of what the market does, you're still going to stick to your trading plan. You're not deterred because you weren't expecting a win and the market gave you a loss. What you're doing is just sticking to your trading plan. You've transcended this outcome-based thinking. Okay? So the best traders, and the real test to see if you're able to manage 7 figures is, are you able to take a $10,000 loss or whatever you risk per position? Are you willing to accept that based on your trading plan and your trading strategy? If you're not ready to be a 7-figure trader. Now, the third mental model or the third mindset that 7-figure traders have that I've seen consistent with them is that they have an incredible level of self-awareness. They know what their triggers are. They know what triggers them negatively and throws them into a cycle. They know what triggers them positively and puts them in a really good frame of mind where they're very present with the market. They understand themselves on a deep level and they know what triggers them. On top of that, they've also put processes in place to manage these triggers. And that they know that if they, for example, have taken multiple losses and this tends to trigger them into poor trading behaviors, they have a process to help manage that. For example, not trading that day or lowering their risk until they get back into good momentum. So they have this deep level of self-awareness about what triggers them negatively, what triggers them positively. They're focused on putting processes in place to manage these negative triggers, and they're focused also on putting processes in place to maximize and leverage these positive triggers so they can get most out of themselves. They also have an incredible self-awareness of what their circle of competence is, which is their trading plan. They know exactly where they have an edge. They know exactly what they need to see in the market to have an edge in that moment. And as a result, they have certainty to put $10,000 of risk on. And what I find a lot of traders, they don't have their circle of competence. They don't know what setups they can excel in and they truly have an edge in. And therefore, they don't have the certainty to put $10,000 worth of risk on that particular trade. And as a result, those traders never build up to being 7-figure traders. 7-figure traders know what their circle of competence is. They know what their setups look like, their A-grade setups that they could take any day, and they know what those look for. They know what their edge is. So they have that self-awareness. Now, you build this self-awareness through experience. You can fast track your experience by doing lots of testing, but mainly you get to it by taking an enormous amount of losses and being self-reflective on losses and reviewing every week. And no matter how good or how bad your trading is, you go in there and you review and you become self-aware. These traders know what their behavioral patterns are. They know, for example, if they don't get enough sleep, they're more susceptible to trading poorly, or when they travel a lot, or when they have arguments and relationships. And they have an awareness of what these behavioral patterns are, and they have ways to manage these, and they have processes they implement to be able to manage these. For example, I know one of my very early trading coaches, they were so self-aware and they knew when they got themselves in a bit of a funk that they would go for a walk and they would have a certain conversation with themselves, and they were able to get themselves out of that very quickly. For other traders, it takes a little bit more time. Some have to take the day off, some have to take the week off. But the point is, these traders know their patterns, they know their triggers, they know where they excel, they know where they don't. They don't try and play where they don't excel. They only focus on their circle of competence. And as a result, they're confident in risking $10,000 a position. And they don't try and play or gamble in what isn't their circle of competence. So they stick to what they know and what they're certain in. So these traders are incredibly self-aware. If you want to be a seven-figure trader, you too have to be self-aware. The way you build self-awareness is, yes, through experience and through taking lots of losses, but more importantly, by reviewing your behaviors every week, understanding what works, what doesn't work, and being self-reflective. It may take some time, but it's about going through that journey and being self-reflective through that journey. Because I know many traders have been trading for 6-7 years. They've gone through that, but they haven't been self-reflective. And as a result, they're not self-aware. So you have to be self-reflective, and you have to give yourself time to learn what you like, what you don't like, what works for you, what doesn't work for you. The fourth mental model is that these traders have a deep reason why. And a lot of the times when I work one-on-one with these seven-figure traders, I ask them, what's your why? They typically tell me something about family. They typically tell me about, wanting to provide to their family, a young child, a newborn, or they have a deeper reason why, some form of philanthropy if they don't have a family, or they have some sort of business that provides to society, and they have this deeper reason why beyond themselves. What I found is that a lot of traders are just thinking about themselves, just being able to get a paycheck, make $10,000 a month from their trading. They cap out around 6 figures. They can have $200,000, $300,000, $400,000 worth of capital under their belt. They can make themselves an honest living from that. They can go full time. They don't need to work any other job, and they can generate enough money for themselves with that amount of capital. But it's the traders who really have a deep reason why of wanting to provide more to a family or to a deeper reason, that at the end of the day need more capital to fuel that vision and fuel that reason why. So this deeper reason why helps hold you accountable to scale up to more capital. The deeper reason why, the more meaningful reason why, also helps you persevere, meaning helps you persevere in the face of challenge. If there is a challenging week or a challenging month, that their deep reason why, or their meaningful vision they have for themselves, helps them persevere through that. So having a deep reason why and some form of meaning beyond just providing for yourself is important if you want to get to 7 figures of capital. And the fifth mental model is that these traders have structure, and they're organized, and they have these processes laid out to help them organize their trading and their life. If you have a lot of conflict in your life, a lot of issues in your relationships, or a lot of issues in your health, or a lot of issues in your business or your job, or whatever else you may be doing in your life, these issues are going to seep into your trading. They're going to affect your trading. They're going to affect your mental state. If these traders have some sort of challenges with their mindset, or the way they see the world, or the way they see themselves, they're going to have issues trading. So the best traders have taken care of the other components in their life. They've structured their life well to have their trading, to have their relationships, to have their health and fitness, to have any other social cause or any other projects or businesses they're working on. And they're spiritually minded. They got their own mission. So these traders have a holistic overview, and they've worked on getting those other areas of life to a place where there's no issues in the other areas of life, so that their trading isn't affected. And they've mastered their psychology as well, their mindset. And they're very organized. They've got some sort of a structure to help organize each of these components in their life, so that they have time to trade, and they have time to be able to go off and give trading the attention it needs for them to be successful with that. And on top of that, inside their trading, they have their trading processes and trading plan very well organized. They know exactly what they're looking for, their circle of competence. And the reason why that's so important to have it structured and to have it mechanical is because they need to have, in order to have consistent profitability, they need to be consistent in the way they execute their edge and their strategy. So without their standard operating procedures, their processes, their circle of competence laid out in a trading plan, then these traders aren't able to have consistency in the way they execute, and as a result aren't able to consistently manage the funded account or the funding. So it's very important, if you want to get to 7 figures of capital, and more importantly sustain that and get payouts from that, you need to have your own standard operating procedures. You need to have your own processes and circle of competence laid out in a trading plan or trading processes, so that you know exactly what you're doing and you can replicate that. And your life is structured so there are no issues or challenges in your life that are going to affect your trading. And everything needs to be organized and structured in a way to allow for consistent execution, because that's what's going to help you sustain the accounts and continue to get payouts from them. So these are the 5 mental models, the 5 principles to being a 7-figure trader. You have to chunk your big goals into small, digestible action steps. You have to see both sides to manage the paradox of a trader. You have to be self-aware to know what works for you, what doesn't, what your psychological triggers are. You have to have a deep reason why and meaning behind your trading. You have to be structured and organized in your trading and in your life. There are an enormous amount of free resources in the description below, such as the Bulletproof Your Mindset tool to help you get your mindset in order, the 6-figure trading plan to help you organize your trading plan. I'm going to leave those resources below. I've also got the link to the free trial for the 12-week program. If you resonate with this YouTube video, make sure you download those free resources and you start using them, because they're going to help in your trading. Okay, if you found value in this video, make sure you like, comment, and make sure you subscribe as well. And share this video with your trading communities or other traders that you know will get value from them. And I look forward to seeing you all in the next video.